coming in from the mid cap and small cap indices as well. But on that note, let's join with our fundamental guest for the show. We have Rishi Kohli of InCred Alternative Investments. Rishi, good morning. So good to have you.
Good morning. Good to be here.
Rishi, let me start off. What should investors do now? Because it's past couple of months, it has been just complete red on the screen, complete red on the portfolio as well. How should you expect investors to approach equities?
Yeah, so I mean, in some past interviews and articles that I write, I have been in fact mentioning since August, September that the period from September, October till March, can be difficult and troublesome. And obviously, the pace and the way it starts happening and the decline starts happening and the volatility that happens around it is never the same. So it's never easy to call it, even though that analysis is there. But largely, of course, the markets have been moving in line with that. The thing is that both from a technical perspective and some of the quant models and stuff that long-term cycles that we follow, based on that, we were getting this indication. And the October to January till now, the way it has developed, it seems in line with that completely. So till March, I would remain overall cautious from a larger perspective. And the issue is that some of the long-term signals have also started getting damaged over the last 1.5 months. If that sort of sustains, then the entire year could be a little tough overall, and there could be a lot of volatility that keeps happening. So that is the broader view. Within that, of course, we are currently few days back, yesterday, day before the lows that we made. Those are in the short term a little oversold. They also come on a lot of strong long-term technical support regions. So a lot of short-term measures combined from trend lines to indicators to about oversold stuff. All of this is sort of coinciding together. So I think in the near term there would be some respite. Next week to 10 days or 2 weeks, one could expect a bounce. But overall, I would be a little cautious for the next few months for sure. And depending on how those go and how these signals sort of develop, maybe even for the next 6 to 9 months, if not just the next 2, 3 months.
Okay. Rishi, but we have been seeing, you said that you're a bit cautious for the next couple of months. We've been fearing that, as feared that Q3 earnings are also not panning out. Trump tariff talks are also taking place. But what key event are you watching out for any cautiousness for the market or any nervousness that could prevail in the market?
Events, is out there. Everyone is aware of it. We have the budget around the corner. We have the RBI meet after that. A lot of stuff happening in the US between Trump coming in and, probability changes on what the Fed would do next, etc. So I think that is the other thing, right? I mean, globally, a lot of macro sort of things are a bit all over the place, even globally, right? With inflation spiking now, sort of, slightly settling, but still uncertain. If I would think of it from 6 to 12 months perspective, interest rates, of course, they spiked a lot. They seem to be settling down. Expectations of some cuts, etc. But the overall picture doesn't give comfort that there is a trend out there, right? Where the interest rates will keep getting cut or the inflation will fully stabilize. So any disruptions that happen and again make some of those indicators change, that will lead to a lot of issues overall for the markets. So I think that is one thing when all macro is very stable locally, globally, then markets are sort of, remain healthy and those fears don't come in. But right now, both locally and globally, nothing is very, very stable. And the potential that next 3, 6 months there are some disruptions here and there is still very highly likely. Even the US 10-year yields, for example, in the near term, they seem to have, stabilized a little bit. But from a long-term perspective, they clearly have room to move on the upside, right? So 3, 6 months, maybe nothing happens, but what if something happens after that? Similarly, if I come to the local side, currency has been not so easy in the last few weeks and months. RBI has obviously brought out some measures to stabilize that. I think in the near term it should stabilize. But again, in the long run, we don't know, how that is going to shape up. Earnings have, as you said, not been coming through, and that's been the primary reason. I've seen that when the long-term sort of technicals or long-term cycles that we follow on the quant side coincide with some of the earnings, growth either improving a lot or declining, then that becomes a good indication. If both of those things coincide, then usually markets 95% of the time will behave that way. So this time again, the same thing has happened that, earnings have not been great. The outlook for the next 3-6 months is not certain. And with that, all the technical and cycle stuff which has been turning negative has obviously then fed through into the markets.
Okay, all right. Rishi, you mentioned that, the US Treasury yields could also move up. Do you expect it to breach that 5% mark? Because we did see in the mid 2007 the onset of, just days before the onset of Great Recession. But do you expect this time also to take place, or how are you watching out it for?
Yeah, so like I said, in the near term, no. In the near term, I think it will remain stable, maybe even decline slightly. But yes, from a 1 to 2 year perspective, if you ask me, I think we will see levels above that at some point.
Okay, all right. But Rishi, after this deep correction that we've seen, and fairly a very bad earning season so far, also we are seeing any pockets of value that you are finding valuable at this point of time, or good buys in terms of themes?
Yeah, so see, I mean, I run a sector rotation model again on the quant side, and that gives some interesting, outlooks and signals at certain points in time. Because as we know, whether markets are good or bad, there are some sectors or some pockets which are always doing better, either absolute or at least relatively. And there, sometimes you do get some interesting contra signals or advanced signals of what is happening. What is interesting is that some of the sectors which had been holding up, like IT, metals, etc., till a month back. I think this month everything that had not got affected has got affected already. So that structure has started getting damaged across sectors. But even then, overall, the financial services index, ex banks sort of thing, so NBFCs and other financial services companies, somehow that sub index seems to be holding up the strongest, and also giving those signals that in the medium term, near term, as well as in the medium to long term, that is holding up much better. That will do much better. So that is one pocket which I would definitely look at. FMCG, of course, in the last 2 months has taken a big hit in most of the stocks, uh, and overall as a sector. So despite traditionally being called a defensive, it has not really behaved in a defensive manner. But having said that, now it has come to certain levels overall for the sector where, again, in the near term, I think there should be some respite. And then within that, of course, there'll be pockets of stocks which will be more interesting as well. So that is something which, selectively can be interesting. Financial services overall, banking, of course, in the near term, again, I think, it has got oversold, excesses are done. Technically, it's looking much better. Interestingly, the bank Nifty versus Nifty ratio, on which also we run some models, that is looking interesting. So I think Bank Nifty has the scope to outperform Nifty, at least over the next 1 or 2 months. So some of those things is what, I would use in the current markets. Overall, anyway, I run more long short strategies, and I think this market environment is perfect for those rather than just pure long. And being hedged or having certain long short or market neutral strategies may be much more interesting for the next few months at least.
Okay. Rishi, just one last question before we let you go. You said that, there could be treasury yields which could also rise up about 5% in the next 1 to 2 years as well. But Nifty has already fallen about, to double digit fall we have seen since the September peaks. When do you expect us to reach a bottom, and what does that treasury yield spiking and, crossing that 5% mark mean for Indian markets as well?
See, for Indian markets, firstly, like I said, near term, I think there is a good bottom. If it sort of breaks the recent lows, then we are looking at a much larger damage. If once it breaks that lows, then you are talking of another 5 to 7% on the Nifty opening up, if at least, kind of thing. So, more likely scenario is that in the near term it bounces and then it comes back again to these levels after a month or two. So I would expect that sort of volatility to continue. Interestingly, there are a lot of parallels that the current fall has started having, both from a technical and a structural and a cyclical perspective, and even earnings initially, at least. Let's see how it pans out to the October 21 to March 23 period. Last 2 years post that has been very, very strong for the markets. So I think most of us have sort of forgotten it, but October 21 to March 23 was very painful. And there were periods when it went down 5-10%, markets came back up also, then again went down. But overall, both from investing and trading perspective, it was a very tough period, right? And most funds were struggling in that period. So initially, the last 3 months, the way it started, it looks to have a very similar parallel. Let's see if it pans out for that long or not. As I said, some long-term signals as we speak, certain monthly things that we follow, and obviously month end is just a few days away, are on the verge of giving those signals. Price damage is obviously not as much, to corroborate. So therefore, the short-term bottom thing may play out, and then later, if those signals sort of continue into next month, then I would be a little more worried for the entire year. For now, I would read it as more, volatility and sideways, so sort of a time correction rather than a larger price damage. But yes, if recent lows break, then that larger picture sort of comes in on the negative side. And of course, on the yield side, I mean, like I said, that is more a slightly longer term call. And near term, I expect stability. So I think near term, that is not going to really impact us much. But in the longer term, whenever that happens, maybe that coincides with some volatility or some decline at that point in time. But we'll know much more particularly only closer to that.
All right. With that, we have to let you go, Piyush. But thank you so much for your time. It was lovely talking to you,
Sure.
and we hope that we connect with
Same
you soon.
here. Thanks.
All right. Thanks.
Bye.
All right, let's take a quick check of the markets. Sensex up about 250 points. Nifty also holding well above that 23,000 mark. Mid cap and small cap indices lending some support to the market. Small cap indices giving up about 2% gains, which is coming in after 3 days of consecutive sell-off that we saw. India VIX up about 2% above that 18 odd levels. So we cannot rule out any volatility that could take place in the markets. Nifty FMCG index, the only stock sectoral loser at this point of time. Otherwise, all of them are participating well in the in the overall recovery of the markets. If we look at some of the top gainers on the Nifty, Bajaj Auto doing well, BEL, Wipro, Shriram Finance, all of them holding well, giving about 1 to 2% gains. On the other hand, top losers, we can see some of the FMCG players, like I mentioned, that was the only sectoral laggard. So we are seeing some of the FMCG players cropping up that list. We can see the likes of Tata Consumer, Britannia, HUL, ITC, seeing a loss of about 0.5% to about 1% cut that is coming in. But with that, we have come to an end of this edition of the Opening Bell. Don't forget to tune in at 3:30 p.m. for Closing Bell. We will be discussing about how the market has developed, what the stocks were in focus. Until then, signing off. Do stay tuned to moneycontrol.com for all the news updates and market insights.